Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, as you might remember, trade 15 did not work out so well. We entered in this area here and we exited at the end of the day on this candle. We took a few percent loss. So what happened after that? Well, the next day, and again, this is just showing you the price we entered on the next day. So the next day, there was a slight gap up, but mostly didn't do much. Ended about the same place as it did the day before. One more day rolled around, price fell, and we decided to go ahead and take that entry. We're going to go ahead and watch that live here in a minute, but you're going to go ahead and see that happen. You know, again, we're trying to pick up an entry price at a lower than we exit. So if we exit here and we're buying at a lower price, those are typically good entries. We do like those. So let's go ahead and take a look at that entry now. So the good news is we got in at a little bit lower price. We actually entered at the end of the day here. I'm going to go ahead and move to the next day. You're going to see that again. One of the things I don't like about this platform is that entry price shows up right here on the next day. So next day, nice gap up. We thought we were doing pretty well. A little pullback in the market. And at that point, let's roll forward one more day. And you see it's just not really moving. Adam's going to make an executive decision, and we are going to take an exit right here. There's a little bit of a gain here, which is great. Unfortunately, it wasn't any more, but again, we're just trying to be cautious here. You can see pretty much it's just going sideways. So we're going to go ahead and get out here. Let's go ahead and watch that trade now. You can see that the order is going to go in and we are out of the trade. Just as a reminder, we are trading live money. I'm showing you these live trades happening in real time, just so that you know the parts where I'm saying we're entering and exit, you get to see those happen live. So let's go over to our results sheet and see how we're doing. All right, so that trade completed on the 11th of May. The S&P was at 412. The S&P actually dropped a little bit. As you know, we got in at a little bit of a lower price. So the S&P lost some between those couple of days. And lucky for us, we didn't pick up much, but we picked up, 1/3%, and that's something we'll definitely take. That brings the year-to-date S&P 500 to 7.7%. Our year-to-date is 11.16. And again, I just want to remind folks that this is real money and real trades. You're seeing those live. But I do want to show you something else that's kind of interesting, because we're benchmarking against the S&P 500. We've talked about that before. We're actually trading an instrument called SSO. It's a derivative of the S&P 500. It actually moves twice the amount that the S&P does for any given day. And that does show, why is it that we're able to outpace that so well? That's certainly one of the reasons. But, one of the things you might be curious is, well, what if you just traded the S&P 500? How would you do against that? So I actually do have that data, and I'm going to show it just so you can see it. So what I've got here is, this is the S&P 500 at 7%, as we talked about. I also do trade the S&P 500 too. And you can see that is, as of today, this is also beating the market. But you'll notice not by as much, about 10% here, 11% here, and we're into May, so we're not even halfway through the year. And so one might say, well, certainly the SSO symbol is better. That's true. I'm going to show you something kind of interesting on the year-to-date, because I also have that data here. I'm going to go ahead and show that. So here's something that's interesting that happens, and I am very curious what you all think about this. I would love for you to comment. But here's the 3-year, 2 prior years plus the current year to date. And I want you to notice something here. So the S&P 500 does just under 30. When I trade it, it's just over 30. So it makes a little bit of a gain. I think I can still outpace the S&P 500. Depending on which year, it may be, a few percent. But over time, a few percent will matter. SSO, on the other hand, clearly like 10% better, 12% better. So on any given market where things are going well, trading SSO can be a real good thing. I mentioned last year was the S&P was down 18%. And one of the things trading a 2x instrument like SSO, we were only down 6. So we're definitely doing better when the market's going down. But I want you to take a look at this. So just trading the spider symbol, just the S&P 500 straight up, we're looking at 11% gain in a market that's down 18. So, I'm showing the 3 years. I'm showing a good year, a bad year, and whatever this ends up being this year, 2023. And I'm curious what you think. What do you think is a better mix of, trading? Should we just be trading spiders? Should we be buying and holding the S&P 500, the SPY symbol? Or should we keep doing the doubles or some mix between that? I would love to have some comments from you and let me know if you're interested in actually seeing those spider trades happen, the SPY trades happen live too. But it's going to be very interesting, and I'm going to continue to watch this either way. But watching the S&P 500 buy and hold against trading the S&P 500 versus trading SSO, you can see these results. I think in a down year, they're very interesting. And I'm always looking, again, I'm not looking for a get rich quick scheme. I'm looking to provide some stable gains. And one might argue that if you're trying to make as much growth as possible, trade SSO, because we have more up years than down years. But if you're looking to try and reduce the risk and stabilize the volatility, possibly it would be considered just trading SPY, or maybe trading them both in some proportion. So again, I'm real curious. Let me know what you think. I'm going to continue generally to track the S&P 500 against SSO. But if folks want to see the spiders in there too, definitely can track those too. So please let me know what you think. Thank you. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.